Good afternoon, everyone. Can you hear my voice and see the screen? Give me a quick check, please. Yes. So today we are going to learn about another very important topic, that is trap zone 1, which is known as break limit zone. Okay. So we are going to learn about break limit zones today. So before I go and teach you about break limit zones, I would request each one of you to go through the disclaimer first. Okay, so let us learn about trap zone 1, break limit zone. So what are they and how they work? Till now we have learned about 4 price structures, if you remember. The demand structures: rally, base, rally, and drop base rally. This is widely available in Google. You can check about this. Okay. Then the supply structure: drop, base, drop, and rally, base, drop. So these are the 4 price structures which we have in the chart. So we have already discussed about it. Today we are going to talk about only rally, base, rally, and drop, base, drop. Okay. We are not going to talk about all the 4 structures. We are rather going to talk about only rally based rallies and drop based drops. So one of the demand structure, and I will talk about the one of the supply structure. We are going to learn how to trade or when to trade a rally based rally or a drop based drop. Okay. So break limit zones are wonderful candlestick pattern in the chart where a trade can be executed with precision. I mean, it's worked beautifully. Okay. So there are 3 types of advanced zone structures. Before we dive into break limit zones and learn it fully, before that we need to understand these two price structures, that is drop based drop and rally based rallies, can be further divided into 3 more advanced structures. Okay, can be further divided into 3 more advanced structures. So what are those? They are, as you already know, momentum base momentum, that means rally base rally, or you may call it drop base drop. This is the first structure. Second structure is known as momentum plus overlapping wicks plus momentum. Here you do not have any base candle in this zone. Okay, so you do not have any base candle. The third one is momentum plus gap plus momentum candle. Okay, again this zone also do not have any kind of base candles. Okay, so these are the 3 advanced zone structures. So let us see how it looks. So this is a rally candle. As we know, this is a momentum candle followed by a base candle. Base candle are small candles with small body, right? And followed by a rally or a momentum candle. So this is my momentum base momentum, where we have a base candle for the demand structure. Okay. Similarly, we have a supply structure which is exactly opposite to this. There we have a drop, and the drop candle is also momentum, followed by base, followed by another drop candle which is a momentum candle. So momentum plus base plus momentum. So this is already we have learned. Okay. So rally base rally and drop base drop. Drop base drops are supply and rally base rallies are demand structure. We already know that. So the advanced structures are momentum candle with a upper wick. This is a rally candle, right? A rally candle with a upper wick, okay, followed by a gap and another rally candle that is a momentum candle with a lower wick. Okay, so understand how these two candles look like. There is a momentum candle which has a upper wick, and there is the second momentum candle with a gap has a lower wick, and these two wicks are overlapping. There is no base candle. The structure will look like this. Okay, so when the structure will look like this, we will call it as overlapping wicks. So this is momentum, overlapping wicks, momentum. So there is no base candle. This is called overlapping wicks. Okay, so this is demand. Another demand is drop. Again, on the lower side or lower bottom of the drop candle, we have a wick, right? And then we followed by that another momentum drop candle is there, where we have a wick which is at the upper portion of the momentum candle. So when this happens, we call it as a overlapping wick zone. Okay, these two wicks of the candles, they are touching each other, right? And this is known as overlapping wicks. So this is a supply structure where we have momentum, gap, overlapping wicks, drop. I mean momentum candle. Okay, so drop, overlapping wicks, drop. So this is the second advanced pattern we have. The third one is again momentum, which is rally, followed by a gap up. There is no wicks at all, right? Or maybe at one side there is a wick, maybe at the upper side or the lower side there is a wick, right? On one side, that is okay. So momentum, gap, momentum. This is also our advanced structure of rally based rally, where we do not have any kind of base candles. So similarly, we have drop, gap, drop candle. So momentum candles. Any question, any challenges you have in this? I mean, any questions, any challenges of understanding this advanced structures? Clear, right? Very easy. Now one thing can happen. It can be no problem, Anshul. Overlapping wicks can be up to body, no problem at all. Okay. Yes, Ashfaq, you can ask me. What is your question? You can open up the mic and also speak up if you want. That we will come to know in coming days, Mohammed, Ashfaq, that how can I mean supply demand be a gap? I mean the I mean conventional demand and supply players fail. Okay, they fail to understand these advanced structures. Okay, so a gap is very much very important, you know, and in the future we have a gap session. I will show you how you can play all these gaps. Okay, and this is a structure of break limit zones. Okay, it's an advanced rally based rally patterns. Okay, and how to trade them I will teach you, don't worry, right now. So so as a conventional demand and supply, you will never be able to play this.
नहीं सर,
right?
I can talk in Hindi.
Yeah, you can. No
बस सर, एज पर देखिए सर, जो सेकंड बोला आपने, जो विक्स में तो समझ आ गया, ठीक है, विक्स टू विक्स हुआ, मतलब यहाँ पर सेलर ने थोड़ा डाउन किया, ओके, यहाँ सेलर थे, तो गैप में कैसे पता चलेगा कि ये सेलर का गैप था, जो रैली गैप रैली है?
वो टाइम दो मेरे को, अगले स्लाइड में सब पता चल जाएगा। मैं तो सिर्फ अभी स्ट्रक्चर समझा रहा हूँ, उसके बाद इसका सारा लॉजिक भी समझाऊंगा, ठीक है?
ओके ओके, थैंक यू।
हाँ, वो लॉजिक पार्ट हम लोग थोड़ा देर में समझाएंगे। Okay, so as of now, understand these are my structures. Okay, sometimes this can be, I mean, there may not be a momentum candle. This can be a base candle as well. I mean, it can be a combination of base candles as well. Okay, sometimes. Okay, this can be more, I mean, base candles, base, gap, base, then base, gap, base, gap down base. Okay, so similarly a base can have upper wick, a base can have lower wick, and there can be a overlapping wick. Okay, so these structures can also form with these two structures, especially not this one, with base candles as well. Maybe a base candle in one side, the other side may be a momentum candle. That also is true with this structure. So don't get confused if you get such structures in the price chart. Okay. Now, break limit zone contains all these three advanced zone structures. Okay. So these are just one part of the break limit zone. So when a rally based rally or drop based drop forms in a chart, it doesn't tell you, Ashfaq, this is the question you have, right? Whether demand exceeds supply or supply exceeds demand. You never know that, right? But this information is extremely important while trading, right? You need to understand that if I am talking about a rally based rally, I mean, if I want to trade a rally based rally, I need to know that there is overwhelming demand, I mean, buy orders than sell orders, right? That means if there is overwhelming buy orders, long orders, that means I may get some pending orders to go along with. I can take a long trade there. But if I open a chart and I show you, oh my God, this is a rally based rally with 3-5 momentum candle thereafter with one base, it's absurd. It is not going to tell you whether that rally based rally have, I mean, a lot of pending orders or not. Okay, so that is not possible by looking into the chart that way. So what we do is, to know that demand exceeds supply or supply exceeds demand, we use the concept of break limit zone. So this is the validation of the zone. Okay, as the name suggests, price needs to break a resistance or support. The break of the resistance or support tells us whether demand exceeds supply or supply exceeds demand. Once we know that, then we look for a zone which formed at the broken resistance or support area. This zone is known as break limit zone. Okay. In this break limit zone, the support or resistance line always cut through the base candle or the gap or the overlapping wicks. So how it happens? So this is a well established resistance, maybe minor, maybe major. Okay, major resistance or minor resistance. So look, price is coming up with a momentum rally candle, then it creates a base, and then it breaks the resistance, moves up and closes above the resistance. Okay, so what gets created here? A price structure where we have rally base rally, a demand structure gets created. Okay, and not only that, the resistance, the prior resistance is getting engulfed. Engulfed means price closing above, breaking it, okay? And when it is breaking, right, I mean at the resistance point, a base candle gets created. What the base candle denotes? Why I want this base candle at the resistance? Understand what happened here. Price moved up, right? Base candles mean that here at this point of resistance, there was a big fight going on between the bulls and the bears, right? They were fighting, and they both are not able to take a decision that price is going to go down or go up. So as I said before, whenever price moves, price creates decision, and these are our decision points. All the base candles are our decision points. So at this base candle, what happens? There is a lot of indecision. Neither the bulls, neither the bears, nobody knows what is happening, whether price is going to go up or going to go down. Okay, so there is a lot of indecision happened at this place, right? And after the indecision, there was a decision taken that the bulls are in control and the price wants to go up. Okay, so how to know that? After the base candle, we see that price has moved up and closed above and created a momentum candle. So the momentum candle basically denotes a decision that either the bulls have won, or if a bearish candle, drop candle forms, then the bears will won. In this case, the bulls have won. Okay, so this is what happens there. And when there is an indecision at the resistance, understand what happens with the retailers. They know there is an established resistance, and they expect, everyone expect that price wants to go down from the resistance, and they are shorting. So after that, when a decision being taken and the price breaks out, what happens here? What happens basically? A lot of, say there is 100 sellers, right? Earlier at the indecision point, there were 100 sellers as well as 100 buyers, right? 100 buy orders. That is the reason this candle, have equal wicks also, right? That means it's a base candle. Neither the bulls, neither the bears were winning. So both were thinking that price will either go down or go up, right? But at a certain moment, some additional buyers or buy orders gets into the market, maybe another 100 buy, right? And because of that, there is a overwhelming buy order happened at this area. So 100 cancelled, and there is 100 more shares. The price, there is no seller left, and there is only 100 buyers left. So price shoot up, created this, showing that there has been a decision being made in the price, and this 100 orders is also pending at this area. So once price returns to this area, we know the price is going to go up. We know that demand exceeds supply at this point. Okay, so you need to understand a base candle is a indecision candle. That means neither bulls, neither bears, nobody is in decision. Equal number of buy orders are there, equal number of sell orders are there, until in a flash a lot of buy orders gets in there and created a imbalance in the price, and because of the imbalance, price shoot up and created a momentum candle. So the structure of a break limit zone is as simple as that. We will require a rally based rally, but we will look for a resistance line that is cutting through the base candles of the rally based rally. Any question, any challenge on this? Any question, any challenge on this? This is the simplest structure, widely available in any charts, any time frame, anywhere you go. And wherever you find them, they work beautifully. Okay? So same way, there is a support. Okay? Resistance are not zones. Rectangle. Resistance means price moved up and fallen down. I have talked about a resistance in the support and resistance session. Okay, you need to go through it. So every price swing is whenever price creates a swing, the swing high is known as resistance. Okay. So Jayaprasad Nairola says, is there any possibility that a momentum candle cuts the resistance line instead of base candle? Yes. In that case, there will be no break limit zone forming. Okay. Are you getting that point? A good question from you. So if the moving candle cuts and closes above, okay, then we will not take it as a break limit zone. But it can happen like the moving candle moves up but comes down, closes below, and then the break gets created, then it's okay. We will take it as a break limit zone. Okay. So similar way, there is a drop followed by a base candle followed by a drop candle, and the support line is cutting through the base candle here. Okay. So when that happens, we call it as a break limit zone. This is a supply break limit zone. Okay. And what happens there? Price is dropping, creating an indecision. First price was dropping here at the support. There was an indecision, and due to the indecision, it could have happened, and many times it happens that price starts moving again up. Okay, from the support. The support starts giving its reaction and price starts moving up. But here what happened, in that expectation that price will move up, many retailers, they jumps in to buy, right? And what happens thereafter, a lot of sell orders being put here and price actually drops and they get trapped, and they make loss. And because of this, zone gets created where we know the supply exceeds the demand. There is lot of sell orders, because this momentum candle only be created if there is a lot of sell orders than buy orders. Why? Because there is a established support line, right? So many players, market participants might have they might be trying to go long here, right? And though so many market participants are going long at the support, still price penetrated and breaks the support and goes down and engulfs it by giving a close below it. So that proves that whatever demand was there, still the supply was higher than the demand. Okay, and this is the most important mantra of this price action, that you need to understand where demand exceeds supply and where supply exceeds demand. So this break of the resistance line and price creating a base drop at that place, and the support line and the base candle is created at the support line, tells us there is more supply than the demand, and we should go short once price comes up to this place. Okay, the color of the base candle doesn't matter. Okay, and one thing more, if the move out candle is starts above the support line, that is also not a matter of concern. But if the moving candle closes below the support and then the base getting created, then it is some other structure and not a break limit zone. Okay, so same as rally base rally. Any questions, any challenges about this? Okay, so this is top, base, top. Now same way we have a resistance line. Okay, resistance means where price has created a swing high before and now price is again coming up to it, and this is what it creates here. Understand the logic here. Both Anshul, you can do support resistance line or SR flip line, they are same. Okay, so both you can consider, but what I will tell you, do not consider a old line, rather than look for the immediate support and resistances. Okay, what I mean by this, let me draw. Say say for instance, this is a resistance swing high. Okay, and price has moved up, came down, now this is a support. Okay, then price moved down, came up, right, and then at this point it created a rally base rally. Okay, this is not a break limit zone, never try to trade it because it will break, right? You need a immediate support and resistance. By this what I mean, price moved up, moved down, the same structure. Okay, and okay, at the same place, now I have a immediate resistance. Can you I mean the same resistance place, I have a immediate resistance here. I'm not taking this resistance, which is a very, very old resistance, and thereafter price has created so many swings inside that. I'm not going to consider this as my resistance, rather I will consider the immediate one which gets created before price is engulfing the resistance. Okay, and in this way this will be my immediate resistance, and I will get a rally based rally here, and I can trade it, and that is my breaking zone. Are you clear, Anshul? Any questions, any challenges, anybody about this? This is a good question. Okay, so now the overlapping, what happens there? Okay, so there is a resistance, okay, well established resistance. Say price has moved up, touched it, dropped. Okay, now price is again coming up now, right? Price is again coming up. At that time a momentum candle gets created. What happened here basically, price moved up first, tried to break the resistance, okay, and then price came down and closed below the resistance. What happens here? Because of this behavior of the price, the retailers, they start thinking that the resistance has started giving reaction and price will go down, right? And yes, Richter, double bottoms and double tops are also support and resistances. Okay, and you can consider it. So now what happened here? They entered a short trade, and I mean many traders, they enter short trade by looking into that the price tried to move up but it failed and came down. And next thing what happens, I mean next day price gaps up above the resistance, okay, and comes down first, creates a overlapping wick, and then moves up and closes above. So in this case what I am looking for, I am looking for two momentum candles with overlapping wicks, and the resistance line here should cut through the overlapping wicks and not through the moving candle body. Mind it, it should not cut through the moving candle body, rather it should cut through the overlapping wicks or between the gap. Okay, so this is my overlapping wick zone, okay, or break limit zone. Same way there is a support, right? Support means prices some time back prices came here and thereafter it bounced from this level. So this is my support. Okay. Okay. So what happening here? The same way, this is exactly opposite of the demand. Okay, so this is the demand which we discussed just right now, overlapping wick. This is just the opposite of that. So there is a drop candle with a wick at the bottom. Now what happened here? Price first went down, almost tried to, I mean, two type of traders try to trade here. First, when price was going down, think this was a red candle forming and price was going down below the support. All the breakout traders, they jumped in because of the expectation that the price will go down. And thereafter what happened? Price again started moving up. So they are in big pain, right? And when price started moving up, all the support and resistance player, they started going long. So once price closed here, both these traders, they are stopped out and they are in big pain, and the advantage the institutions take about this. Okay, and what happened next? Price capped down below the support. Understand, whoever gone long are now out of the trade. Both the short and the long, both are out of the trade, and only the institutions are there to play. Now thereafter price caps down, opens here, it closes here in this candle, and next day it gaps down below the support, comes up above the support and drops and closes below. And the support line is cutting through the overlapping wicks and not the moving candle's body. This is what you need to look at. So all of you clear about this? Yes, this is applicable to all the time frames, Victor. There is no specific time frame you are going to look at. All the concepts which I am going to teach you, or whatever I have already delivered you, all the concepts work in all the time frames. Okay, so there is no specific time frame thing here. The next one is, this is overlapping wicks. The next one is, there is again the resistance. Price comes up with a momentum candle, and next day simply caps up above the resistance line. Okay, so this is a gap, and in the gap case also, the resistance line should cut through the gap only and not through the moving candle body. Okay, so it should cut through the gap, and then we will call it as a demand break limit zone. Same way, this is a support, price is coming down, and suddenly next day price caps down below the support and closes below with a momentum candle. We call this as a supply break limit zone with a gap. Okay, and the support line should cut through the gap only. Okay, and the moving candle here, the moving candle should not, the support line should not cut through the moving candle. That is very important. Okay, so where to find them? One, demand break limit zone at sideways range breakout, rally based rally. There you can always find a break limit zone. When price moves in sideways range like this, right, support and a resistance, right, this is a sideways range, breakout happens and price closes above the resistance, right? We have learned, if you remember yesterday's session about institutional trap curve. The trap curve always starts with an accumulation. Remember, because in a chart, price will start after the IPO happens, right? And it will start its journey from somewhere. And at that place, first accumulation will happen, buying will happen, then price will break out, price will close above, that is called engulf. So once that happens, we know an accumulation got created, and then the throwback will happen, and we are going to take a trade on the retest. So where we will take the trade in retest, right? We know that at the point of the resistance, there where the price has broken the resistance, there demand exceeds supply, okay? At this place, the demands exceed supply, right? And there, if at this point, if you get a rally base rally with the base candle, I mean the resistance line is cutting through the base, that is the best place to enter a trade, my dear friends, and price will come down to it and give a big bounce. So how it looks in the candlestick chart, let us see. Okay, so this is price is moving in a sideways manner, then price comes up, okay, and price creates a base candle at the resistance. With the base candle, everybody thinks that okay, and this is a red base candle also got created, so price might be going down, and they are short. And next day, what happens? Price moves up and creates a momentum candle and closes above, and an engulf happens in the price, and the resistance is broken. So understand, in a line chart, the same phenomena we can see, but in a line chart you may not be able to find exactly is there a rally base rally, I mean the base candle is cutting through, I mean the resistance is cutting through the base candle or not. For that you need a candlestick chart to find it out, okay? So once we get that there is a rally base rally gets created in this sideways movement, and the base candle is cutted through, cutted by the broken resistance line, the next thing I know is I can take a trade here. I will plot my entry line, proximal line and distal line, or the stop line at the base candle. We have already learned how to plot that. And next is I will wait, I will plot this zone, I will wait for price to come down, and a wonderful trade will be taken, okay, on retracement. We are retracement traders. We do not go inside any trade without retracement. So when price will come down, it will come down with creating couple of red candles. Don't get fear with the red color, because that is good, otherwise we will never get a feel, okay? So once we get the feel, then the new trend starts. If you remember Wyckoff or institutional trap curve, after the breakout of the sideways range, the new trend starts, and inside the sideways range, if you get this kind of a break limit zone, you can trade it and make big money, okay? So any questions till now about sideways movement where you will get a break limit zone, how to measure it, I mean in a sideways trend, and what kind of a trade we can take? So supply break limit zone in sideways range breakout, okay, drop base drop, where we are looking for this drop base drop, exactly opposite to demand break limit zone at sideways range breakout, okay? I mean the same thing, and drop base drop is the structure which we are going to look at. So there is a sideways movement of the chart, there is a resistance, there is a support, and price is moving in sideways range. Here what we look for? We look for a breakout of the support and not resistance, because we are looking for a supply. So what happens when price breaks a support? That means at this area there is, and I mean price breaks a support and engulfs it, closes below, then we know that at this area supply exceeds demand, because before this breakout happened, understand, there was equal number of demands, I mean buy orders, and equal number of sell orders. That is why price was moving in sideways manner. But something happened here at this point, because of that price fallen down. So what could have happened here? Simple thing happened is there was no buy order left, all the orders were taken out, consumed, and there is a lot of sell orders in place of buy orders. So there is overwhelming sell orders, and that is the reason price drops. So we know that there is supply exceeds demand, and we can trade it. Okay, we can take a short trade. So where we are going to take the short trade? At the point where support is taken out. But we just cannot trade it in a line chart. Why? Because if there is, sometimes friends, there is no drop based drop form at this area, and the main zone may be here. So price may go up, test this, and then drop. So that is a possibility. So if we have a drop based drop at this area, then only we can trade it. Okay. So how it happens in a candlestick chart, because candlestick chart help us to understand drop based drop. So how it looks? Price coming down, moving up. This is sideways movement. Then price comes down, creates a base candle at the support. Okay, and the base candle may be green color, and because of the green color, many market participants, they thought that the price will go up, and they are trapped. And once they are trapped, what happened? Price falls down and closes below, the engulf happens. With this engulf, we know that the support is taken out, right? And the reason, the indecision happened at the support line. Okay, so there is the orders which were put in. I mean the bulk orders, sell orders were put in here. So once price returns to this area, I'm going to plot it, my stop line, my entry line, and I'm going to take a short trade here. This works beautifully, my dear friends. Not all rally based rally, not all drop based drop will work, but this one will always work. Okay, so keep this in mind. This is a very easy structure, and you can find them abundantly in so many charts, right from 1 minute to yearly charts, wherever you go. Okay, whichever time frame you go. And this is a super zone to be traded. So Anshul, this support and resistance is of diagonal also? No, right? Never ever try to trade with a diagonal trend line. It is horizontal. Okay, that is why I have marked horizontal lines. Okay, so never use a diagonal line. That's a good question. You need to use a horizontal line. Horizontal support and resistance I am talking. Okay. So no, Jayaprasad, actually not. Jayaprasad's question is in this pattern. We always go ahead with body to wick zone, or it's also wick to wick. I prefer to be wick to wick. I mean, I am a little aggressive trader. I do not want to miss this kind of a trade. I have shown you an example that a body to wick trade can also be taken. Why? Because the support, understand, this is a support line, right? So what happens when a support breaks? It becomes it's a flip, right? So I am creating a flip here, and my expectation at this level is that a SR flip in future may be created because of this break. Okay, and if a SR flip is going to get created, then this is the support line which price will try to touch before going down, because if it doesn't touch it, then the SR flip will not be created, because once a support, it becomes resistance, and that can only happen if the price touches the broken support, okay, or the broken resistance, as the case may be. So in that case, if say you are seeing that the support line is little deeper inside the base, so you can choose your entry based on that. I mean, in the expectation that price will come and touch the support line. So in that case, I may have a preference that, okay, I will not take this much of risk, rather going taking the trade body to wick will make me give me more reward as well and less risk as well. So that is a decision I have taken. Okay, so based on this knowledge, you can take such kind of small decisions which will help you to fine tune your entry points. Okay. Actually, I wanted to tell you this point. In fact, that's a good question you asked. That is the reason I put it like that. Okay. Yes, all three are possible, Director. It's just in your hand how to handle them. And I mean, if you know the right things, what is happening there, and what generally happens, like how SR flips and all gets created, thereafter it is very easy for you to fine tune, right? If the same support could have cut through the base here, from here, then what would I would have never tried to take a trade body to wick, because I would have missed it there, right? So I would have 100% taken this trade wick to wick. Same could have happened that this one is cutting through the lower wick. In that case, what can I do? I can go jolly well take the trade at the upper body. I mean, in that case, I will get bigger reward and small risk. Okay, so you can use this while trading. Okay, while fine tuning your entries. Okay, so this is one of that reason. So demand break limit zone at sideways range breakout, the same thing. Now I will show you how the rally plus rally, that is gap, forms. No, this is only support and resistance break, Anshul. This is not, I'm not going to take it as any pattern break, okay? Take it support and resistance, and it will automatically show you all kind of pattern breaks and everything. You doesn't have to worry, or you doesn't have to, do more analysis to find there is any pattern or not. So don't worry on that. If you keep on looking for the support and resistance, it will automatically show you the break limit zones. Okay. Anyway, the support and resistance will be created at any pattern. Okay. So zone made of 2 consecutive momentum candles with overlapping wicks and have no base candle. Okay. So how it happens? This is the same thing. There is a sideways move, and then the breakout happens, the engulf happens. I know demands exceed supply, and I am going to trade this area, right? So how it happens in the this time in the candlestick chart? Look what is happening. Price moved up, tried to break the resistance, but failed and came down, creating a upper wick, and thereafter price caps up above the resistance, comes down a little, creating a lower wick, and moves up and closes above. So an engulf of the demand happens. So how to trade it? Now we do not have base candles. How to trade it? Simply we are going to take the overlapping wicks and we are going to mark our entry line and stop line here at the end of the wicks. Okay, so I will take the upper wick topmost point and the lower wick topmost point to mark the proximal line and the distal line. Now one thing else you can do here? One thing more, okay? You can go to one time frame lower or two time frame lower to find a zone inside this area. You will definitely find a zone here, and that will contain a base candle. You can trade that base candle. Are you all getting my point? If I go one time frame or two time frames lower, I will definitely get a base candle, maybe a different structure, but I will definitely get a base candle and I can trade it. In that case, my risk and reward will again change. My risk will drop and my reward will go up. So this is how I am going to plot the, I can directly trade overlapping wicks like this, proximal line and distal line. This is my zone. Once price comes down, I am going to take the trade and make the money. So this is how the overlapping wicks are traded. Same way, the another sideways movement happening, right? This time the break of the supply, support happens and an engulf happens. So we know supply exceeds demand at this place. The same when price comes up, we can short here. So how this looks into a candlestick chart? Simply price is moving in sideways manner, then price comes down, breaks the support but fails to go down farther and moves up and closes above the support by showing the entire world that the support is reacting and it is giving some kind of a reaction and price may go up, right? And then what happens next day? Price gaps down below the support and price creates a overlapping wick and drops, right? And engulfs the support. So when this happens, we can mark the wick lowest point and the highest point with my proximal and distal line, and when price returns to this, I am going to take a short trade. Now the trade can be taken in a lower time frame. As I said, in a lower time frame you will 100% get a base candle with a different structure at within this area. I mean within this, say this is 110 to 90, okay? So within this price band you will get a small zone and you can trade it, okay? Anshul asked a question, in lower time frame these zones must be fresh. Yes, okay, we will talk about that in a upcoming session, not now. As of now, understand the zone, okay? So both, Richter, you can do both, right? Stop loss, entry and target, all, okay? So this is the overlapping wick example. The same way, demand break limit zone, sideways range again, this time we will see how the rally gap rally and drop gap drop forms, okay? The same thing, price is in sideways mode and the breakout happens at the upper stage, and we know that the demand exceeds supply, and once price comes down we can go long. And here in the candlestick chart, how it happens, price is in sideways mode and suddenly price comes up to the resistance, creates a momentum candle just and closes below the resistance, and next day price caps up above the resistance and closes above, right? Engulfs. So by this a rally gap rally gets created, and we know that demand exceeds supply here and we can trade it. So how we can trade it? We will mark the gap by taking the move in candles high for distal line and move in candles low as proximal line, and we can mark it like this, and this will be my zone. Now one thing, okay, one thing. So for gap base gap, I will tell you, whenever you are taking trade, right, the institution may trick you in many ways, right? So always check 1 or 2 time frames below that whether you have a zone here or here, at the bottom or at the top, right? You will definitely have a zone. Always keep your proximal a little, if it is little above, keep your proximal little above, and if the zone has a base candle little, I mean the lower part of the base candle is a little lower than your distal line, then keep your stop loss below that. Don't keep your stop loss just below the gap. This is something a little tricky thing, and this is from experience I am telling you. What happens? Price will come, it will breach this, and then a big rally will happen. Why that happens, you know by now. Because the institution wants their fill, and they will take out the stop, and price will move up. I can show you right now some examples of this. Okay. So for a gap-based graph, always go 1 or 2 time frames below and just check out whether there is a base candle which has a lower wick. Otherwise, you are going to, I mean, there is a chance that your stop gets hit. So it is better and preferable that you keep your stop loss below that base candle. Everybody clear about this? Any challenges? Any challenges? And I think I'm going a little fast, or is it perfect for all of you? Targets we have discussed yesterday as well, right? The targets will be open or to the opposite zone, same break limit zone. If a supply break limit zone is opposite, you will target that, as simple as that. Or any other trap zone is opposite to you, you will target that. So you already know that, right? So you have to wait and learn to understand the target part. It has some more knowledge you require before you can set the target. As of now, you learn to take the entry and the putting the stop loss. And then the target will not be a difficult task for you, because by doing price action analysis, you will know where to target. You will get always big targets, okay? And no vague targets, 2:1, 3:1, no, right? Or any drop based drop, any rally based rallies. I mean, you are not going to target all those things. You are going to target the real areas where from the price is going to turn. Manjula, I have discussed about all-time high in my last session, how to target it. Can you please go through that session? Institutional trap curve. I have discussed about how to place target in all-time high. Okay, you can go through it because it will require a lot of discussion. Okay, and I think it's very clear if you go through it. You may have you gone through the session yet? I don't think you have gone through it. If you have not, then please go through it. Then you will be able to set the target for all time high. Okay. So then price comes down, tests the proximal line and moves up. So you make a good amount of money. Yeah, I know that. When you ask me that question, I already know that Manjula has not gone through the session. See, Manjula, if you doesn't follow the sequence, you will end up, missing a lot of important points. And I have created the course in such a way that you need to follow the sequence. If you are not following the sequence, and if you think that I know already many things and I am not going to learn much from this, then you are mistaken, right? At every stage, at every session, there is something or other which is very important, and they are related to the current session also. So there is a way I have created this sequence. I have given a lot of thought, and then only I created. And I want each one of you to go through the sequence. The sessions in a sequence. Don't miss any session and then jump off to the other. In that case, you will miss a lot of information, and you will not be able to, do the analysis properly. So go through the sessions. It's very small sessions I have created, right? Just to make you understand and all the doubts go off. So go through those sessions, and I am sure all your questions and doubts will be cleared. Yes, Anshul, sequence are very important. Every session requires previous session's knowledge. That is the biggest thing. This session I am talking about, think I have already delivered you some of this portion yesterday, right? And then only I am showing you. Yesterday I said, okay, this is a accumulation, then it is a breakout, then the throwback will happen, then the retest will happen, and I will take a trade. But that's vague, right? Where will I take the trade? Today I am talking about where will I take the trade. So every session is very, very related. Please go through these sessions and then I am sure all your questions will be answered. Still, if you have any doubts, I am there to help. Anyway, so this is rally, gap, rally. Same way, supply break limit zone with drop, gap, drop. So what happens here? There is a sideways movement. Price is moving in sideways, in between us resistance and support, and then the breakdown happens. We will always look for engulf because the engulf tells us, oh yes, this is not a fake out, this is not a trap for us, rather there is a real time engulf happened and there the supply exceeds demand and I can trade this area. So it is very important for us to look for the engulf always. So then price comes down, price is moving in sideways manner. This is the candlestick, the same thing I am now replicating in a candlestick chart, right? Do bear with my drawing of the candlesticks, all handmade, right? To make you understand or to give you the visual effect how it gets created. Okay. So then what happens after a sideways move? Price after creating a momentum candle, price caps down below the support and closes below, right? And engulfs below. So what happens here? The support line is cutting through the base candle. The gap here. There is no base candle here. So the same way we will mark the gap. We will put our distal line, our proximal line. So this is our zone. Once price comes up to the zone, we are going to short and make good money. Real time good money happens from break limit zones. Now, the same way I talked about in a rally gap rally, you need to check in 1 or 2 time frames below that whether there is a small base at this area or this area. You just need to mark the distal line above this base and entry line below this base candle. So this adjustment you need to do in a lower time frame, otherwise price may, one thing can happen, price may touch this base candle, lower one, and drop and you may not get fill. Okay. And another thing, price may go up, touch the distal line, you stop and then drop. So this is a fine tuning which you do, right? So this fine tuning you need to do that. Okay. So this is a supply zone. I am sorry, I have written wrong. I need to change it. Okay. So any questions, any challenges till now? This is about sideways movement. I was talking about sideways, sideways and sideways, right? All the 3 structures I have shown, how a supply forms in a sideways, how a demand forms in a sideways, right? So I have shown you all the sideways movement. Okay. Now what about a trend? Can break limit zone form in a trend? Yes, it can. Okay. So how to know that something is a break limit zone? So in an uptrend or downtrend, a break limit zone can form at the engulf of any minor resistance. So in a sideways movement, we always have a major resistance, major support, right? But in a trend, any minor resistance, any minor support creates a break limit zone. All the concept remains the same. Okay. The break limit zone can make the price sideways in a trending market. This is another very important observation I have, that after say price is moving in a trend, right? Suddenly a break limit zone gets created, right? Once the break limit zone gets created, price suddenly starts moving in sideways manner there. I mean, accumulation or distribution starts getting created there. Okay, so let us see how it happens. So this is a trend, higher highs, higher lows getting created, uptrend. And in our uptrend, this is a resistance, this is a minor resistance, okay, which got engulfed. So when it got engulfed, right, the break happened. At the point of break, there is a, we know that demand exceeds supply here, right? And at this point, there is a rally based rally. I have not drawn the, I think, the candlesticks here, but you understand that at this point, rally based rally gets created and the resistance line is cutting through that base candle, okay? So this is my break limit zone and I can take a long trade there. After I take the long trade, you will see price will start moving in a sideways manner before a breakout happens in either side. And when the big breakout happens, there again another rally based rally or a break limit zone can form at the resistance also, the newly formed major resistance. So by this, another accumulation also, reaccumulation is also forming in the chart. Okay, so this is an uptrend example. Same way, price is falling, price going down, lower highs, lower lows getting created. Same way, there is a minor downtrend, minor support is there, right? Minor support is there. I'm sorry, minor resistance is there, right? And price engulfs the minor resistance, right? So at any point of time, when price, engulfs it, and at this area, at the point of engulf, if there is a rally base, rally gets created, and the resistance line is cutting through the base candle, at that time we know there is a break limit zone gets created and we can take a long trade here, okay? And price will move in sideways manner for few minutes and then the breakout will happen and price will move up, okay? Friends, any challenge with this two? Any challenge? Are you able to understand what's happening there? These two are different structures. These two are trend. And in trend, understand what I am showing you here. In downtrend also, in uptrend also, I am showing you a break limit demand zone and not supply. Think about it. I am showing you in uptrend, obviously, a break limit demand I will expect. But in a downtrend also, break of a resistance can create a demand break limit zone. So in this case, what I am actually showing you, a demand break limit zone forming both at uptrend and in downtrend. We can see a lot of examples of that in the chart. Okay. Okay. So in this case, I am only showing you the demand break limit zones where demand exceeds supply. Understand, in this both structure, the demand exceeded supply. This is the resistance and that got broken because of overwhelming demand here and price returned to it and moved up. Same here in a downtrend, what is there? In a downtrend, it is established that there is more supply than demand. That is the reason price is going down. But at this point, what happens? Price breaks the supply. So that proves me that here at this point, there is overwhelming demand than supply. Something has changed in the downtrend. Something has completely changed. Okay? And because of that, I know there is more demand than supply. I can go long and I have a break limit zone at this area and price will move up. Before price will move up, after in a downtrend, it will certainly create a sideways move just because the institution, they need a lot of fill, they will make the price move sideways and then the breakout will happen. Yes, Anshul, it can be first stage of institutional trap curve accumulation. First stage I have shown you at the in the previous slide, where there is a accumulation and the breakout. This is the second stage. This is the second stage, okay? Or maybe you may say this is the first stage as well. After the downtrend ends at this point, maybe, right? But the first one is second stage. This is reaccumulation, and this might be a change in trend happening here. Okay, we'll talk about that in upcoming sessions as well. Right. Okay, so all three advanced zone structures apply. I mean, it can be rally based rally, rally overlapping wicks rally, or rally gap rally. All three applies here. So same way in a trend, a supply break limit zone, how it can form, okay? So in an uptrend or downtrend, break limit zone can form at the engulf of any minor support. Same way, opposite to sub demand break limit zone. So what happening? This is uptrend again, right? In an uptrend, price suddenly breaks a support, Now, in an uptrend, we doesn't expect a support to be broken. We expect a demand to be a supply or a resistance to be broken. Okay, but because in a uptrend there is always overwhelming buy orders than sell orders. But what happened at this place? Something very important happened with this engulf, that at this point suddenly there is less sell orders, less buy orders and more sell orders. That means a lot of overwhelming sell orders were there, and because of that price went down and closed below. Now once that happens, I know any of the supply structure break limit zone can form here, and if that forms and the support line is cutting through the base candle, then I can take a short trade, because supply exceeds demand here, and this is how I can take the trade. And thereafter I expect price to get sideways and then breaks down. Okay, so this is in uptrend. Okay, this is in uptrend. The same thing can happen in a downtrend. So in a downtrend, price is going down, a lot of sell orders, I know, supply exceeds demand, and that is the reason every support breaks in a downtrend. Every support breaks in a downtrend. So whenever a support breaks, it tells me that supply exceeds demand, and if a based drop gets created at this place, I know after the engulf, I know there is a break limit zone and I can take a short trade there. And thereafter price may get sideways and drop. Or here one thing more can also happen, after this sideways movement, if price breaks out and closes above, this can turn into a accumulation as well. So this is one thing. At any accumulation, reaccumulation, distribution, redistribution, you will find break limit zones in either side of it. Okay, both at the break level and the entry level, both sides. Okay, so any confusion, any challenge about the trend part? Any confusion, any challenge? Sometimes there may not be a sideways movement and price can directly fall, right? Because price is dynamic. This is something I have observed, so I put it here. But that doesn't mean that price cannot directly fall straight fall down from the break limit zone. It can also. It doesn't mean that there has to be a sideways movement or happening all the time. Okay, you can play both the sides if there is a break limit zone. So all three advanced zone structures we discussed at the beginning, they applies here. Now note, if a break limit zone gets created just before a supply or demand, a trap zone, a important trap zone, key level. Okay, I must change this. I must write key level. Price may become sideways at first. Price may become sideways at first, and then it may break the opposite key level. Okay. Jayaprasad has a question. For accumulation after a downtrend, the spring has to be a support area, right? Yes. Yes, Jayaprasad. The spring will be at the support area. There will be a fake out of the support. Okay. So if a break limit zone gets created just before a supply demand, I mean a key level, right? A trap zone. Price may become sideways at first, and then it may break the opposite key level. Okay. So what I mean by this is my again another observation. Even a smaller time frame break limit zone can break a higher time frame supply demand, especially conventional supply demand. Okay. So how it happens? Say price is moving down, it creates whatever supply demand key level or whatever, right? So it's a higher time frame supply. Okay. And thereafter price again comes up and moves down, so a resistance, a minor resistance gets created here, right? And thereafter price is coming down, you are waiting to take a short trade in the HTF supply. That is where this game happens. Okay, you are waiting in the HTF supply to take a trade, and price creates a break limit zone just in front of your HTF supply. I mean, here this minor resistance line is cutting through the base candle, and the resistance has been engulfed also, a rally base rally formed, and we know our break limit zone formed just opposite to HTF supply. What will happen? Price will come down, test the break limit zone, will move sideways couple of times, and there is a big chance it will engulf the HTF supply. Okay. So the point here I want to discuss is, say if by mistake you are taking a short trade in a HTF supply where there is a opposite break limit zone got created, then what you can do, you can wait for price to go to the break limit zone and you can square off your position. Don't open that position. Okay. So get out of that position. Getting out of that position will be a good idea. Now, another thing, if you have monitored that there is a break limit zone got created in front of your HTF supply, then don't take the trade. Don't take a short trade until your break limit zone gets engulfed. If say at any point of time, say price creates a base candle and breaks the break limit zone, then on retracement you can take the trade. Okay. So otherwise I will never ever short at this position. Friends, are you able to understand what I mean here? This is the power of a break limit zone, my dear friends. It can break your HTF supply demand as well. Okay. Okay. So we know demand exceeds supply and the accumulation is formed. Right? We can take a trade there. Same way, again, price is moving up. There is a HTF demand. Price came down, moved up, a support got created. Price coming down to our HTF demand, and we are happy we can take a trade. So friends, how many times, if you have ever traded conventional demand and supply, how many times you have faced that your HTF zone was taken out, I mean, by a very small rally based rally, and maybe a 5 minutes rally based rally. Price couldn't break it. Have you ever faced, have you ever, find such a level? I mean, have you ever observed also? So Jayaprasad, now are you getting the answer of that? Why that happened? Now you can go back to all those charts and find out whether I am speaking sense or nonsense, right? So you should go back and check all these things. What will happen, Richter? The same thing will happen. Price will become sideways until price breaks out either side. Okay. So what I will do, I will simply wait and I will not take a trade. I will wait for a breakout at either side. Then using some other concept, I will again take a trade. Okay. So I will wait for some time. I will not get in. My money is very important. I am a poor person. I cannot give my money to the market. Institutions are waiting to take all my money, and I am not ready to give them money. I want to get. I want to take their money, and they don't like it. So this is one of the reasons many trades get stopped out. So after this, what happens? Price creates a drop-based drop, and the support line is cutting through the base. And if that happens, I know a break limit zone got created because of the engulf. And what I will do, I will never ever go long. If I am long, then I will book my profits here at the break limit zone. If I am not long, I will wait for this to break, right? Sometime back, due to I was trying some. I'm a very aggressive trader, and one day I had this knowledge and I went against a 10:10 OE score. I mean, an advanced OE score. I went against it and I traded a 5 minutes break limit zone there, right? I probably had told you this story, and that's what happened next. Price breaks the higher time frame monthly zone and went down from a 5 minutes. That was the thing happened there, and somebody got very angry on me. How could that happen, right? HTF demand got engulfed by a 5 minutes. Actually, he was telling me that you are taking a wrong trade. It cannot happen. But I moved forward. I took that trade. I was like aggressive. What I will lose 1,000, 2,000 rupees. But if that works, then I have a good thing in my pocket. Anyway, so this is how the things work. So we know supply exceeds demand here. Once you know, again another trade is available at this place because a distribution gets created. Friends, any challenges, any questions about break limit zones? Is it an interesting pattern? Have you liked the pattern? When you backtest, you will see how it works. You will be amazed to see that. Right? So, yes, right? So, it's a very nice pattern and very, very effective pattern. Okay? So all three advanced price zone structures apply here as well, right? I am showing you that there is drop-based drop is there, but you need to consider all three: drop, gap, drop, overlapping wicks, drop. Yes, Richter, I am about to go and show you that. I was prepared. I do that in each and every session, right? Wherever there is a need of it. I always do that. So don't worry. I will about to end the slides and then I will take the charts. Okay. So that's the end of session trap zone 1 break limit zone. Now get back to your charts and start analyzing at least 10 scripts and be familiar before next topic. Share your work with your mentor. You are not doing no work happening there, and soon you will see that you will in grave situation if you don't practice it. All the best. Everything will look very, very easy to do, but when you will try, you will not be able to do that. Why? Because you are learning so many new things in last couple of sessions, and think there is so many new things you are going to learn in the coming sessions as well. So if you don't practice, you will tend to forget. You are a human being. You will tend to forget. You will not remember all the things at one time until you do a lot of practice. That is where the challenge comes. Once you do a lot of practice, automatically you tend to remember all the old topics. Otherwise, if you don't practice, you start forgetting. Even that happens with me. If I go for a travel and then I come back, say after 7-8 days, I also start. I mean, seeing charts blank. Okay, so it takes some time to begin settle it down. So understand, if it can happen with me, what can happen with you. So it's not that the knowledge is too tough. It is not tough, right? It's simple. But as because you are learning a lot of stuffs together, you need to do a lot of practice. Okay. Okay. So that's the end of slide session. I will take you to the, don't leave, I will open the Trek Tiger because the tiger takes some time to wake up. And okay, so give me 2-3 minutes to, and uh, to open up the Trek Tiger. So thank you very much. Hope you like this session. Please send in your valuable feedback to info@questionwithghosh.com. My dear friends, I'm not getting any feedbacks. I don't know whether you are getting the sessions or you are liking it or not. Whether you are learning, you have any suggestions, you have any complaints. I don't know anything, right? So I will not be able to help you out. So please do send your feedbacks. Then only I will be I will be able to serve you in a better manner, right? So no, don't send it here. It goes off, right? It doesn't fits in my brain. You need to send it at the right place, okay? Where I can see it, cherish it, whatever required, I can do it, right? So after closing this session, all these messages will go off. It will not be there, okay? So you cannot record them. That is the biggest challenge. Anyway, so let us go to the Trek Tiger. Just wait for some time, let the tiger wake up. Now tell me a script which can I open. Can you all see the Trek Tiger chart? Okay. So a lot of accumulation, reaccumulation happening at this place. that big accumulation, right? Breakout happened, price retested it, moved up, another accumulation got created at this area. Okay, another reaccumulation, reaccumulation. Okay, moving up, the trend got steeper here, as you can see. I cannot draw the trend properly, but I will try. This is the trend, and that got very steeper. Okay, and as you can see, a 90-degree move happened here in this stage. 90 degrees. So what happens after the 90 degree? The trend breaks and price falls down, and that was happening here. So once it is happening, I may go very close. Let me see what happened there. So as you can see, okay, price breaks down. This is my distribution, not a different look. Until price moves up and drops, thereafter another distribution get created here in the price. Here it tested the distribution, dropped, thereafter price moved up to the distribution again, as you can see. Okay, so the distribution to the distribution, price moved up and dropped again. Okay, I think this accumulation also is there, is a small accumulation, and price is moving up from this accumulation. Again here price created a distribution, price came up to the distribution, dropped, and at this stage there was a small change of trend because of this levels. Price moved up to this distribution, in fact a little higher up, and then dropped, right? So again this is a ascending channel which formed in the chart, right? And price dropped, moved up, and moved up to this area, which looks like another distribution is there, right? Which price formed, little bit tested, but that's okay. Price tested it and dropped till this level. So as you can see, price started from here, accumulation, moved up, trend high, 90-degree, came down, then the distribution redistribution started happening, and steadily price came down to this accumulation, and from this accumulation, price again started moving up. Okay, this is the accumulation. So this is a complete institutional trap curve happened here. Now price is again moving up. This is another accumulation here, and this is another accumulation here. They both are being created at this old accumulation, and price is moving up. Okay, so this is Wyckoff. I just wanted to show you a Wyckoff, how this kind of a thing happens. Okay, now let us find out the break limit zones. For break limit zones, I need to draw all the support resistances, right? This is a different pattern, so I'm not showing you right now. We'll talk about it in upcoming session. I'm looking for a break limit zone. Okay, this is a resistance cutting through the base candle. This is a big candle, but it's a base candle. Rally, base, rally. And if I draw it, I mean, what I get, that this is a break limit zone. Price came up to it and gave a nice reaction, 2 3 to 1, and then it breaks. Okay, so this is one of the break limit zone I can see in the chart. Okay, then this was a break limit zone demand. Okay, what is the high of this? Is 435.90. What is the high of this? 436.20. So this small resistance is cutting through the space candle, and this is a rally, base rally, and which formed inside the sideways movement. So I can call it as a break limit zone, and I can draw it, and I can mark entry line, a stop loss line, right? And I can take the trade. Now look, immediately on the third candle, on this candle, what happened? Price gap down. Why this is a gap down? Price closed here this day, price closed here. Next day price opened here, that is a gap down happened. After the gap down, price came down a little, tested this, and then look at the bounce. The break limit zone giving its bounce here. Okay, so once break limit zone giving bounce, look how big a trade can be. This is a reaccumulation happened, right? You know, I just said after the uh, break of at the time of the break of accumulation or reaccumulation, this kind of a zone gets created. Okay. Okay. That day I recorded one video, right? I don't know whether you will all will like it or not. Do you want to see that video? All small 3 minutes video about a creation of a break limit zone. I forgot I didn't created that. If you want, I can show you that video right now. That will be a very good visual representation how it happens, right? Right? So give me a few minutes and let me find out that video. Okay. This is also a minor resistance. Okay, just before I go, this is a minor resistance, and as you can see, it got broken. This is a trend, and what happened? Rally, base, rally, and if I mark it, right? If I mark the base candle, can you see price came down to it, gave a reaction, and then only it broke. Okay, so this is also a break limit zone. Maybe it has given a smaller reaction, but still it is a break limit zone. Okay. Okay. Just give me a minute. Just give me a minute. Let me find out where I have kept that video. I've just recorded for this session only, but I forgot to add it. And my mistake. Where was it? I've recorded in. Hmm. There's so much thing. I forgot where I kept the recording. No, I have not kept it here. So what we do, let us take a 5 minutes break. By that time, let me get the video, right? And we will watch that video. I think that will be a very nice uh, way to learn price action. Okay. So give me 5 minutes time. It's 4:47. I will be back by 4:52 p.m. and we can start the session. Okay. And by that time, I will also have a glass of water. Okay. I hope nobody has any problem with that. So all of you back from the break, can you hear my voice and see the screen? Give me a quick check, please. Yes. So let us watch the video. I hope you can see the chart in the video with Nifty 1 day chart, Nifty 50 chart. Can you see on the screen? Yes. So let us watch this video. This video I have prepared where you will see how basically a break limit zone gets created and how to trade it. Okay, how it gets traded. Okay, so I hope you like this video. I'm trying to create this sort of videos for all the things. Now, one thing I want to discuss before, especially for a break limit zone is, let's go back and see at the point where the break limit zone got created. Okay. So what do you see here? There is a drop, gap, base, gap, drop. Okay. When this is the scenario, you have a break limit zone because the SR has cut it through the base or the gap, right? So in this case, if you see, if I would have marked the base candle only as my zone, what would have happened? Look, I would have been stopped out at this place. I would have been completely stopped out. Oh my God, what happened? Okay. So I would have been completely stopped out. Can you see? This is the level. It stopped out the base candle and then dropped. Okay. So understand what happens. The support line is just above the distal or at the distal line of the base, and you have a gap. In this case, I would prefer to take the entry from body or upper body to the, and I will cover the gap as well. I will take the lowermost point of the moving candle, and this is how I will mark, and I will take the trade, and this way I will have a better reward and less risk. This is the fine tuning you could have done. Friends, is this helpful? Give me a quick your feedback, because whether this will help all the students to understand the topics better. I mean, I am planning to create all the topics like this. Yes. So this is how the supply or demand break limit zone works. And as you can see, a big sideways movement happened here. So price, this is a distribution, and price will fall down for sure. Right? So this gives a clear visualization. If I take you to the charts and I will go and do this, you will not, it's very difficult for a newbie to understand what's happening if I go take you to a chart. But if I create this kind of small videos, I think that will give you a better idea. I mean, better visualization effect, because you will know how I am taking the trade or how the trade is planning. Even if price going deep inside, we can rely on this kind of structures. Okay, so as you can see, there are many zones forming. This is a drop based rally, but they don't work, right? This is a rally based rally, they don't work. This is a rally based drop, this doesn't work. So it is only the trap zones which work, and this is one of the trap zones, the break limit zones. Okay, so if you this video is recorded, so don't worry. In today's session, you will be able to see this video a couple of times. So go through it, understand the topics, and then then practice a lot and send me this the homeworks, and that will help you. Okay, so do a lot of practice. Hope this works. Thank you for joining. That's the end of today's session. Hope you have liked. If you doesn't, whatever it may be, send me a feedback. I need your feedback. Okay, so send me it in info@prosenjitghosh.com. Thank you. Bye bye. See you then on next Saturday. By then, that time I have given so much of time from feedback from my last session that sir, please give some more time between the advanced classes. So I have created a lot of time for you. Now you have a complete 1 week's time to catch up and do a lot of homeworks, right? So use this time to do a lot of homeworks. Thank you. Bye bye. Once we complete the trap zones, then we will start the live session. Okay, then your live session starts. Till then, bye bye. See you then.